Welcome to this deep dive summary of Rich Dad's Guide to Investing by Robert T. Kiyosaki, the third book in his legendary Rich Dad series. After teaching us the mindset of the rich in Rich Dad, Poor Dad and how to escape the rat race and cash flow quadrant, this book focuses on the most important path to wealth, investing. But this isn't your typical finance guide. Kiyosaki doesn't throw numbers or stock tips at you. Instead, he takes you on a mental and philosophical journey, showing how the rich think, prepare, and act as investors long before they ever buy their first asset. This book is less about what to invest in and more about what kind of person you must become to be a successful investor. 1. What should I invest in? Kiyosaki breaks a major myth early. The poor and middle class often ask, what should I invest in? A question that reveals lack of financial education. The rich, on the other hand, ask a very different question. What type of investor do I want to become? The focus isn't on chasing stocks, crypto, or real estate. Instead, it's on becoming the kind of person who understands markets, takes calculated risks, and builds systems of wealth. Kiyosaki identifies three types of investors: accredited investors, people with money who usually invest in pre-established vehicles; qualified investors, individuals with both money and experience; sophisticated investors, those who create investments, like building businesses, startups, or real estate deals. He emphasizes that becoming a sophisticated investor takes time, education, and discipline, but offers the highest rewards. 2. Investing is a plan, not a product. Most people believe wealth is achieved by buying the right investment products, mutual funds, stocks, bonds. But Kiyosaki insists, the product isn't the investment, you are. Before investing $1, he urges you to build a personal investment plan, which includes a clear vision of financial freedom, a mission tied to your values, a list of goals and milestones, a team, advisors, mentors, accountants, etc., a commitment to lifelong learning. One example Kiyosaki gives is of a man who wanted to retire in 10 years. Instead of looking for hot stock tips, he learned real estate, practiced small deals, failed safely, and gradually built passive income streams until he could quit his job. 3. The core mindsets of a rich investor. Here are the beliefs that set rich investors apart. They think in terms of assets, not income. The poor trade time for money. The rich acquire assets that make money while they sleep. They value financial education more than formal education. A student loan doesn't make you rich. A financial lesson does. They welcome risk, but only when it's calculated. Rich investors learn to manage risk, not avoid it. They use strategies like due diligence, leveraging teams, and creative financing. They know how to spot opportunities others miss. When everyone's panicking, the rich see chances. Like Warren Buffett says, be greedy when others are fearful. They build businesses and use them to create investment vehicles. Kiyosaki himself uses his companies to generate cash flow, which he then reinvests into real estate and other assets. 4. Building your wealth foundation. Before investing, Kiyosaki recommends creating a solid base. Get your financial statements in order. Learn how to read income statements, balance sheets, and cash flow reports. Learn the language of money, taxes, debt, ROI, leverage, and legal structures like LLCs. Surround yourself with experts. You don't need to know everything, but you need a solid team. Start small. Do mock investments, paper trading, or invest small amounts to learn. A real example: one of Kiyosaki's students started buying $50 garage sale items and flipping them online. Over time, he grew into e-commerce, then into larger business investments, all from starting small and learning fast. 5. The investor's mindset. One powerful metaphor from the book: before you can build the Empire State Building, you must dig deep. That deep digging means self-discipline, studying markets, mastering accounting, understanding laws, and training your emotions, especially fear and greed. Kiyosaki also urges readers to create income-generating assets, not just chase capital gains. For example, owning rental properties that pay monthly. creating an online course that sells passively, investing in dividend-paying businesses. Conclusion. Rich Dad's Guide to Investing is not a get-rich-quick manual. It's a mental blueprint for becoming the kind of person who not only earns wealth, but keeps and grows it. If you're serious about financial independence, Kiyosaki invites you to stop asking, "What should I invest in?" and start asking, "Who do I need to become?" Be part of our journey. If you find our content valuable and inspiring, don't forget to subscribe to the channel and turn on the notification bell to stay updated with our latest videos. Your support motivates us to keep going and bring you the best content, so don't forget to leave a like and share the video with those who might benefit.